Hello and welcome to Market Insight. I am Lavina Emma. It's the start of a new week and we're going to have a full 5 days this week. No public holidays, hopefully. So today we will discuss the Nigerian stock market's performance last week and explore experts' insights on what to expect this week. As we know, last week we had the Muslim holidays, so a lot of days were off work. But this week it's a full week ahead and we're going to discuss the market trends, key events and investor sentiments to help you navigate the ever-changing economic landscape. So on today's show, I'm going to discuss with a chartered stockbroker what to expect on the Nigerian exchange market this week. So today, discussing the Nigerian stock markets, analyzing the trends last week, how it felt last week, and also this week is Muhammad Jamiu Kayode. He is a chartered stockbroker and an authorized dealing clerk of the Nigerian Exchange Limited. He will be joining us via Zoom this morning. Welcome to Market Insight, Muhammad Jamiu.
Good afternoon. It's a pleasure to be here on the program.
Yes, last week I mentioned earlier on that there were 3 days public holidays, so we just had 2 working days last week. So now, how did the market trade last week with just 2 working days, Monday and Friday? How did the markets fare last week? Let's talk about the top gainers and the top decliners also.
Good morning, everyone. Last week we had 2 trading days, and within the 2 trading days, market traded stocks worth about 28 billion worth of stock. When you look at this analysis one after the other, you look at on Friday billion, while on Friday, market traded about 21 billion worth of stock on Friday. And when you go further to look at the performance, the general performance of the market, when you look at ASI, which measures the general performance of the market, you will realize that market lost about 1.0%. Market is depreciated by 1.08%. This is not unexpected, but we don't expect it's going to be as wide margin as this, because of the fact that the MP meeting that was held, there was hike in the rate of monetary policy, and because of that, there is inverse relationship between the 2 markets, the money market and the capital market. Wherever there is higher rates, then they rather go for that. And for the fact that the market has been growing region for a period of time now, the market is now reacting to that particular issue because of the fact that some risk-averse investors, they will now rather go for some stock like fixed income, and when they realize the rate in the market is so high, they rather go for fixed income and also go for some short-term investment. So those are the things that is affecting our market as we speak this morning. And when you look at it, we are also in earnings seasons. You see some companies have started releasing their results. Some have declared dividends. Some have been marking down for dividend and so on and so forth. These are the activities that have been happening in our market. And that is what we have as at last week. When you look at the analysis further, you will see that we have the top gainer to be Morrison Industry, which gained about 20.75%. We have Orlando, which gained about 10.57%. And Transcorp PLC gained about 10.33%. We have the capital management gain about 9.68%. When you look at the top losers, most of them, they are in banking sector. And this is not unconnected with the issue that is happening in banking sector. But let's look at those top decliner. We have Assets Holding PLC that lost about 14.6%. We have United Capital, which lost about 13.92%. We have Guaranteed Trust. We have Ditco, which lost about 13.92. Flour Mill lost about 13.55. So these are the 4 losers, the top 4 losers that we have. And when you look at it critically, you will realize that the activities in our market last week, we have about 75% activities in our market is being done by the financial services sector. And that is why you see that most of the top gainers, if you look at top 10 gainers, term losers, you realize that we have about 4 banking stock on it. And that's the reason why you see, and up to today, you see that our market is always in that line, moving towards the banking sector, the direction that they are going into. That's the way our market always trend. And as we speak today, we believe that the market should continue in that negative note, but I believe it's going to be minimal because this information will still, this issue of rate, monetary policy rates, the decision affecting our market will soon wind, and you see people coming out, investors coming back to the market and to pick up those stocks that are very cheap. And if you look further in the week, we have some stocks that was marked down for dividend. That during last week, we have United Capital, which was marked down for 1 naira 80 kobo. We have Access Holding was marked down for 1 naira 80 kobo, and we have Multiverse Mining and Exploration PLC marked down for 5 kobo dividend. And also during the last week, we had some companies that declared the result. Declared result and also declared their dividend. We have Jitco. Jitco declared 2 naira 70 kobo. We have Zenith, which declared 3 naira 50 kobo. And we also have United Bank for Africa, UBA, which declared 2 naira 30 kobo as dividend. So these 3 companies are yet to be marked down. And that's the information we have last week. And looking at this week, we believe that the market will also be on a negative trend, but the margin may not be that wide because as we move into the future, those stocks will become cheaper for investors to come in and they'll be able to take them. And don't forget, the issue also that affects our market is this issue of capitalization that the central banks said the banks should do. And in the market, as of today, we have about 10 banking listed companies that are in our market today, and they should be ready to recapitalize. And when you look at those information, the line item that the CBN is looking at to be sure whether you fully recapitalize or not is to be recapitalized with 1, retained earning over the period of time, and the second should be your share premium over a period of time. So this thing will constitute, it will make some banks to come out for the fact that they want to raise this 500 billion minimum capitalization that CBN I want them to do. And this has made some banks to be coming out with right issue, some with public offer, and so on and so forth. So for the time being, we will begin to see activities at the primary market rather than in the secondary market of capital market. So this is where we are today. We begin to see some banks coming out to say they want to issue right. They want to issue right issue. They want to come with IPO and other form of raising funds to be able to meet up with 500 billion bank capitalization.
Okay. Thank you for that, Muhammad Jamiu. Yes, you really went in depth to analyze how the market fared last week and your speculations concerning how it will fare this week. As we know, we have a full 5-day working week. So now let's talk about the banks. Yes, you mentioned earlier on the recapitalization going on with the banks, how they need to increase their capital base to a minimum of 500 million naira. So yes, based on that now, let's talk about the earnings of the top 5 banks in Nigeria. Now, we know Access Bank is on that list, UBA, Zenith Bank, GTCO, and First Bank of Nigeria PLC. And we know that these 5 banks are the top 5 banks in Nigeria. When we look at their earnings, yes, we know last week was not so good with Access, but we believe, like, based on what you are saying, it's not going to end on that same note, that the trends might actually change in the coming days. Now, looking at these 5 banks based on their earnings, do you really think they might take up more smaller banks due to this new exercise by the Central Bank of Nigeria? Because maybe some banks might not meet up, so these 5 banks might be the ones to take up smaller banks, thereby reducing the number of commercial banks we currently have in the country. Yes, your thoughts?
Yes, when you look at these big banks, when you look at their balance sheets, you know that to get to the minimum of 500 billion is not something that is so difficult for them to do. Some are even trying to raise even in foreign currency. So I don't want to go into that details for now. But what I know for now is that when you look at their balance sheet, you know that these banks are ready to take up any bank, especially Access Bank that has been on the move for acquiring those small entities, not small financial entities, not only banks, that make them to become the biggest bank in the country in terms of asset base. When you look at the asset base of Access Bank, you see that Access Bank has a asset base of about 26 billion, more than any of them as we speak today. So we are expecting that most of these smaller banks may not be able to meet up with their capitalization. And what is expected of them is that some of these banks will be ready to offer the shareholders something and be able to take them up, then look at it. And we have some of these smaller banks, I don't want to mention, that have a very good asset base. They have good retained earnings, but the fact that they won't be able to raise this particular fund will give them opportunity to be able to merge, and this synergy will also make a bigger and better banks, and this makes our banking sector to be so good and huge to be able to take other financial risks that some of this banking sector can take. So as I know and I believe that most of these banks we may likely to have the reduced number of banking in the listed in the list of listed company of Nigerian Exchange Limited. So simply put, those banks should be ready to be taken up by these bigger banks.
Yes, so therefore we can anticipate mergers and acquisitions announcements that might drastically reshape the landscape of specific sectors in the Nigerian stock markets going forward.
Exactly.
Okay. Yeah, you were going to say something?
Yes, I also want to say that when you look at these banks and you see the result that has been dished out as audited financial report for the year end, you realize that those banks, these 5 banks, we call them FUGAs, these 5 banks, they are top tier banks as we have it. You see their earnings. You see as of today, it's Zenith Bank that's leading. But when you look at the normal profit that they generate, you realize that Zenith Bank is not rather it's Access Bank that's leading in that aspect. But whatever is the case, the results that has been released so far, they are good ones, and they are companies that you can invest in. So that is why you see some banks, they are wise enough to be able to just pay little of their earnings out, earning per share out as dividend. When you look at a stock like a company like GTB is paying 2 naira 50 kobo. This might be a strategy to be able to retain some of their profit and some of their earnings, so that be able to use it to make up to what they want to raise in the market, since they are going for 500 billion. So these are the strategies that some of these banks may adopt, and you can say because they declare little dividend or small dividend, that does not mean that they are not good to be invested in. When you dissect the company from top line to bottom line, you will know that most of these companies are good to be investing.
Okay, sorry about that. Okay, so now, yes, let's talk about inflation. So now we know that inflation in Nigeria is over 31%. So how will ongoing inflation pressures impact investor confidence and potentially trigger sector rotation within the Nigerian Stock Exchange, concerning how it will trigger investor confidence in the Nigerian Stock Exchange?
This is a very good question. So when you look at the inflation rate as we speak today, and a wise investor will not look into any other thing than to come to equity market, to come to capital market and come and invest in this listed company and make sure that they will be able to partake in this return that is being given by listed company on the NGX. When you look at the inflation rate as of today, the inflation rate as of today is around 31%, as you rightly said. And the MPR is now up to 31%, as you see. Well, but when you look at year-to-date return in the market as we speak, from January to April alone, is around 36%. So it's even far above the inflation rate. But when you see passive investment manager who always go for risk-free fixed income instrument, we can give 15, 17% and they'll be okay. But in this sense, what it means is that you are not making return. In risk sense, you are not making real return. Rather, you are making loss when your inflation rate is at 31%, and you invest your fund into a instrument that will give you just 15, 17% or maximum at 20%. But you go to capital market, you go to equity market as we speak today is giving you 36%. That is general performance in the market. What it means that there are even some listed company that have gained more than 36%, but averagely or weighted average performance in the market shows that market has declared, has given you 36% as we speak in the market. So an active portfolio investor, what they're supposed to look at is supposed to look at those risky investments that can be able to give them higher return, and they can be able to outperform what the rate is they can be given, whether in the fixed income market or from monetary market. So these are the things that we need to be looking at, and that makes our investment strategy to be one of the best ones. And we should always stop to be a passive investment strategist. Rather, we should also always be an active investment strategy so that you can be able to make a return that can outperform all other portfolio that may be gathering. So this inflation rate is, so if you want to use it, it's better to use it to gauge whatever return your portfolio is giving you. So if you are investing in a portfolio that's giving you 20% and your inflation rate of return, inflation is around 31, what it means that your actual return is negative. So you need to look for an investment that will compensate you for inflation rate, so that be able to make real return on your investment. So in simple terms, the only investment that can save you from this inflation rate, that can make you make a real return on your portfolio, is to invest in equity market. And that's the only way you can go. There's no any other investment that can give you such rate of return as today.
Hey, well said, Muhammad Jamiu. Thank you for that, actually. So investing in the equity market is what can guarantee you more returns than investing in any other sector of the Nigerian stock exchange. Okay, before we round up now, can we expect any policy changes from the government that might influence investor decisions this week? What do you think?
Not yet. We are not expecting any government policy for now. The only thing that we know is in the town is the issue of FX market. We are seeing that our market, our foreign exchange, our currency is gaining value day by day. And when you see this, we should be expecting that
Muhammad Jamiu. Okay, he's still here with us, yes. Okay, let's take a short break right now. Yes, we'll get back shortly. Okay, he's here with us. Now, Muhammad Jamiu, can you hear me?
Yes, I can hear you.
Okay, so I'm listening to you.
So what I was saying is that the only information that is in town now is the issue of FX market. Our currency is gaining value as we speak now. Now, the way we are to benefit it is when you see that there is liquidity in that market. There's free entry and exit. Whenever the foreign investor wants to come into Nigeria, they will be able to get dollar to come in. And when they are repatriating their profit, they should be able to, they will be able to get naira when they are coming in. When they are going out to repatriate their dollar, they should be able to have access to dollar. That's the only thing that's remaining. So the liquidity market has to be created in that market to ensure that foreign investors can have free entry and free exit whenever they want to invest in our market. When you look at the local and foreign investor activity, the investment activity from both foreign investor and local investor, you realize that in the year to date, it shows that we have 12% foreign investor participating in our market, while we have 88% of local investor participating in our market. But if you look at dissect it month by month, you will realize that by January, we have 8% foreign investor, but by February, it has moved to 18% activity of foreign investor. So this policy, this particular policy of government, by making liquidity to be happening in our FX market, this will guarantee this foreign investor to come in our market and to be able to invest in our market. So by this, it's going to make our market to have more robust and have more room to be able to grow better and higher than what we have today. So as far as we are concerned, there's no policy, but the one that the federal government has been doing in supporting the dollar, I think is a good one for the foreign investors to be able to come in as much as the market, the FX market, is liquid enough for them to come in. So now, as we speak, the market is good, and we believe that the fundamental market is still there. So we are not expecting any market, any legislation or any policy that will come from the government that will mar our market progress as we speak.
Okay, thank you very much for joining us this morning on Market Insight, Muhammad Jamiu Kayode. It's always a pleasure having you on the program as you analyze the stock market this week and the trends to look out for, what kind of investments we should also look out for. So we look forward to having you again on the program. Thank you for joining us this morning.
Thank you. Thank you.